So the housing market in the city of Calgary has officially slowed down. Look at this chart here. This is the second month in a row that we've seen a price reduction for the total residential benchmark price here in Calgary, something that we haven't seen for quite some time. You can see that the inventory has increased, the sales have decreased, the pricing is going downhill. What the heck is going on? Let's go check that out. My name's Fyfe, your Calgary real estate agent. If you're looking at getting into the market, it's so important that you're looking at this data and you're putting it into practice. Every single month, every single day, the market is shifting and changing. There's really good deals to be had out there right now, but at the same time, people might be anticipating a rate reduction coming from the Bank of Canada, which could be causing this slowdown. So if you're looking at getting more information, go ahead, book a call. The Zoom link is in the description, or you can go ahead and put your property address into this home evaluation tool and you can get an instant home evaluation if that is of something of interest. So let's get into it. The sales have slowed down. The new listings have slowed down. The inventory has rapidly increased and the months of supply has rapidly increased. The city of Calgary is seeing some changes and we are going to try to figure out if it is straight across the board or if it's just in certain areas. If you want to read this on your own, go ahead and pause the video, skip to the next chapter. After you've read it, I'm not offended. Calgary housing market sees shifts. September 3rd, which is today, housing activity continues to move away from the extreme sellers market conditions experienced throughout the spring. Easing sales combined with gains in supply pushed the months of supply above 2 months in August, a level not seen since the end of 2022. As expected, rising new home construction and gains in new listings are starting to support a better supplied housing market. This trend is expected to continue throughout the remainder of the year, but it's important to note that supply levels remain low, especially for lower priced properties. It will take time for supply levels to return to those that support more balanced conditions. So it's still a seller's market. It's slowed down. We've gone up to 2 months of supply, but when you're looking at those lower, more affordable product homes, you are going to notice that it's still pretty quick. If you're like 6, 7, 800,000 and up, you're going to notice that there's more supply. Inventory levels in August reached 4,487 units, 37% higher than last August, but nearly 25% lower than long-term trends for the month. Higher priced properties mostly drove the supply gains as the most affordable homes in each property type continued to report supply declines. The supply gains were made possible by both an increase in new listings in August and a pullback in sales activity. There were 22,186 sales in August, representing a 20% decline from last year's record high, but still 17% higher than long-term averages for the month. The sales declines were driven by homes priced below $600,000. Following a stronger than expected gains earlier in the year, the pace of price growth is starting to slow. So we're still seeing increases, but we're starting to see it decrease in the, we're still seeing some increases, but we're noticing a slower pace, like mentioned. But there are actually quite a bit of quadrants and communities and property types that are seeing decreases, which we'll touch on in a second here. So let's touch on this once more. I really like this chart. Red bar is obviously declining. Are people anticipating a rate reduction in September? Probably. Are people waiting to see how that actually is going to be put into effect and if it's going to increase their buying power? If the interest rate is going to decrease by 0.5, which some people are anticipating, that's a pretty big bump in their actual allowability of purchase, right? Like their buying power. So a lot of people put their homes up on the market in the summer when obviously some activity starts to slow down as people are on vacation. But this year, with the anticipation of this pretty major decrease in interest rates, I would assume that it's kind of a perfect storm where people are just kind of holding out. Like, why would they go and make a move right now unless that perfect home came on the market when they might be able to afford a little bit more, right? And they can get a little bit of a higher valued home if that's what they choose, or they just want a lower interest rate before they lock into 5 years, but still purchase a lower priced property. So, when we started to notice these decreases in June, I was, it's kind of common, right? If you look back over historical data, June's typically slow with the stampede. July is hit and miss. Sometimes you see a little bit of an uptick in July, kind of somewhat bouncing back to normal, with August kind of slowing down. September typically sees a little bit of an increase as the demographic change, and then it slows right down until the holiday season. This year, a little bit of a different story. You can see the inventory has pretty sharply increased every single month at a very steady rate. You know, all the homes left over at the end of the month have compounded now. The sales have decreased every single month since May. So that's obviously putting some pressure on the inventory, which allows the buyer to have a little bit more of a negotiation power. So very interesting market we're experiencing as a whole. Now, if we just look at the year-to-date stuff, we're going to talk about this for a few slides, right? Total listings year-to-date. We're pretty much right on that 10-year average, right? Nothing too out of the norm here. We are seeing more listings, which is great. I was actually hoping for more listings in months past. I've actually spoke that, and I think it was in March and April when the sales outpaced the inventory. I thought for sure, like, this is it. This year's going to be crazy again, right? Then they had a rate reduction and then it slowed down, right? Calgary has gone through this thing, but when you look at year-to-date new listings, we're right on pace. Year-to-date sales, we're right on pace as well, right? You look at 2021, you look at 2023, it's pretty average stuff here, right? We're noticing a very sharp decrease, but when you look at how fast and how aggressive our spring was, even with the slowdown, we're still on an average trajectory when it comes to year-to-date numbers. Now, when you look at the price gaps, right? Like if you look at the sales by price range, look at the 700 to a million, right? We have not seen that amount of sales in a while, right? You can see in the last 4 years, we've skyrocketed, right? You can see there's quite a bit of sales. You can see that a lot of the homes sold below 300 or 400 or 500,000 have seen some decreases, where the properties 600, 700 and up have actually increased year to date compared to years past. So there's been more activity in the higher end market and less activity in the lower end market, and I believe that's because the inventory in the lower end market is still pretty tight. So let's keep that in mind. If we look at the total sales by price range just for the month of August, you can see nothing really out of the normal here. You can see the $300,000 price range saw the most amount of activity, followed by the $600,000 price range. You can see that the 7 to 8s was 242, 8 to 9 was 122, 9 to a mil, 83. Nothing really out of the ordinary there. It is slightly surprising to see the 600,000 seeing as much activity, but that's just the new normal basically for a detached home on the lower end here in Calgary. Now, when you look at the inventory, right, so the leftover homes at the end of the month, you can see, look at how many homes are left over from the 300,000. There's a lot of condos still available in Calgary, almost 800 units still available, which is a healthy amount. It's still low in our city, but it's a healthy amount. You see that 709, again, I break it down there, but if you're looking for specific price points, this is important just because you want to know, how many homes are actually left over in the city, and then you got to break it down into the quadrants and then look in like some similar communities. So let's kind of look at this chart here. So this is the numerical information. So that chart at the very beginning, which I like with the red bar going down, this is the same information, just broken up into more of a numerical style. So you can see that the sales are slowing down. The new listings have slowed down. The inventories have increased. The days on market has shot up rapidly. And this is actually one of the main reasons why I like this chart, is because you see the days on market for the entire city, total residential. So all property types morphed into one. We'll talk about detached, semis, townhouse, and apartments in other videos. This is all combined into one. You can see that we dropped all the way down to 19 days in May. June, right, we increased a little bit, not much. July, we saw a 4-day increase, and then again, we saw another 3-day increase, right? We're up to October of pace compared to last year, right? You see, in October of last year, we had 2,100 sales, but we only had 2,600 new listings, where this year we have 35. And the inventory already in August, we're at 4,400, where in October of last year, we only had 32. So we have a large amount of homes left over at the end of the month from what we were used to seeing over the last, let's call it 2 years. The benchmark price, we've already talked about that. We've seen some decrease. We saw a peak in June, 608. We saw it go down to 606, now 601. Are we going to drop down to 599 in September? I kind of doubt it. If we do see a decrease, especially a larger decrease in the interest rate, I would imagine we're going to see some sort of uptick in activity. We're going to see more people go to the market. Hopefully we don't, move in too much of a crazy direction, but I would imagine we're probably not going to hit 599 as a benchmark, but I could be totally wrong. Median price, we did see that actually decrease as well. It went from 570, 563 all the way down to 556. The average price always jumps, but you can see we again hit our peak in June, whereas the average was 623,000, then it went down to 606 in July, and then it went 609. So the average has kind of found maybe that new normal-ish. Yeah, so that's pretty much that. I'm not going to really dive into that. Again, if you want more information kind of like detailed to your personal situation. That's why I always recommend reach out, because this is total residential. Like this is honestly like super high level Calgary. Like this is not going to help you in a personal manner if you're looking at an apartment in Southwest, right? Like there's so many different things that we need to consider in that segment. But if you are curious of what the values are in Calgary, this is a nice little breakdown for the entire city. Again, East Calgary with the attributes is 443,000. You look at Northeast Calgary, it's 530,000. So again, you want to make sure you put those attributes into play here. The total residential price here has actually decreased from last month, which is again what we've already talked about. It actually decreased by $4,900. Okay, we're still up 31,000 from the year prior, but we're down 49 from last month. Okay, we're still up 6.3%, but we're down from last month. Detached have seen a decrease of $5,200, right? The semi-detached has seen a decrease of $6,700. Row, $2,500. Apartments, flatlined, $200 increase, right? There's a lot of slowdown in the market, right? So now we'll start to break it down into the individual property types. If you want to read what the city of Calgary has written about these property types, go ahead and pause the video and give this a read. Again, said it before, I'll say it again. There's a lot of information that needs to be digested for a personal level. This is all high level stuff of the city. If you want that, the Zoom link's in the description. Book a call with me or go ahead and reach out. If you are curious of what your home is valued at, we're seeing some decreases in the city. You want to know if your home is seeing some decreases as well in your community. Go ahead and click the link. It's the very first link in the description. Go ahead, put your property address in. You can get an instant home evaluation. Me or a member of my team will probably reach out. We'll probably say hi. We'll have a smile on our face. If you're not looking to make a move, that's fine, right? We're just looking to provide value and try to let people know what's going on in this ever-changing market. Now, this is a microeconomic breakdown. This is kind of the bread and butter of the entire video. I'm going to break this down into 4 separate videos. Over the last couple of months, it's been a little bit of an interesting summer. I haven't actually gone to breaking those down in detail. But moving forward, starting today, we're gonna break this down. We're gonna get you those 4 extra videos every single month. Look at all the red, okay? $13,000 decrease detached city center, $10,000 decrease detached northwest, $13,000 for west detached, right? We're seeing pretty large, pretty sizable decreases. Like if you look at West Calgary, they saw a $10,000 decrease last month and then another $13,000 decrease this month, right? So in the last 2 months, for the benchmark attributes for the entire quadrant, they've seen a $23,000 decrease. Okay, it's pretty crazy stuff. That is definitely the most aggressive in the entire city right now for decreases. You can see even the apartment sector has seen some decreases, even though we are kind of shifting more towards the apartment sector. It's kind of upholding some of the averages, right? Where we didn't decrease as much as other quadrants, or sorry, other property types, but there's still some decreases, right? Like look at $2,900 decrease in Northeast. You can see a $3,400 decrease in Southeast, as well as a $2,800 decrease in East, right? So you start to break this stuff down, you start to look at the sales and listing ratios. You can see some at 40%, some at 50%. Sales to new listing ratios are pretty weak right now. The market again has slowed down. Are people waiting for that interest rate increase? We're gonna just have to wait to see what happens tomorrow actually. So I apologize if you're watching this video after. I'll make sure to update my other videos once I get some interesting information of the interest rate from the Bank of Canada. This is the total price change chart, okay? Look at the decrease in that red bar. So the red bar is the year-over-year benchmark percentage change, mouthful. We are still above, like we're at like 5%, right? I think there's like 6.3% year over year. So we're still seeing, compared to last year, pretty large decrease. But over the last 4 months, 5 months, you can see just how much we've fallen, right? We were at like almost 10% year over year in, let's call it March. Now we're at 5%. So there's still increases from last year, but they're not as big. Month over month, we're seeing decreases in some markets, but we haven't actually seen a year over year decrease yet. I don't think we're gonna get there. I personally don't believe we're going to get to the zero or the negatives. Like last time we saw a negative year over year was in like, let's call it September of 2020, right? We dipped all the way down in 2023, very low, like 1% year over year, but then we went right back up, right? We saw an increase in the market. So that's where this chart comes into play, where we look at, again, the red bar, right? We're looking at the benchmark because it's tied to attributes. I really like that. It makes it easy for people to understand. You start at 2021, we saw a massive increase and then a flat line at the second half of the year. Fairly common. 2022, we saw a massive increase again, but then we saw a decrease because they had increased the interest rate so quickly over 6 months that the benchmark price fell. People were like, whoa, we need to put a pause on this. We don't know what's going on. 2023, we saw an increase again. We saw people come back to the market with these newer, higher interest rates. They said, we still want to buy Calgary real estate, but we saw a slowdown in the second half of the year. And then 2024, same thing. We saw another increase, but are we seeing a slowdown, or are we starting to see a small correction because people are not content with the prices that Calgary is currently offering? If we see some dramatic decreases in interest rates, I would imagine we're probably going to see prices increase in Calgary. If they are safe about it and they only have small decreases, I could see us maybe correcting price a little bit, but I just don't fully see that decrease, especially over year decrease quite yet. I'm optimistic about Calgary. There's a lot of people that moved here. Our economy is quite strong. People seem to like the politics here. Yes, it's controversial, but for the most part, people seem to be coming here for various reasons. So I just don't think Calgary is going to see any major corrections yet. I could be wrong in a couple months, right? Every single month, something different. But for right now, I'm still optimistic that Calgary is going to see some growth. So if you have any questions, contact information is below. Thank you very much for watching. I'll see you on the next one. Peace.